Chair Gensler, I'm just going to start with the day of news and start with Silvergate in particular. Its shares very much under duress at the moment because it couldn't hand in a 10K filing to you in time, noting that it was worried, of course, about, well, its ability to remain a going concern. Have you worried about the spillover effect here? Are you talking to colleagues over at the FDIC and some of the other institutions?
So let me step back, Caroline, from any one company and for your viewers. We play a role in overseeing the markets, overseeing registrants, and of course we have a robust sort of cop on the beat, our enforcement and examination function. So I'm not going to comment on any one company or here, but in terms of the overall question about crypto tokens and the crypto markets, while they are, give or take, $1 trillion of worldwide market value, our overall capital markets here in the U.S. are well over $100 trillion. So that puts it in context of scale. But it is important that so much of this field, this crypto field, is highly speculative. It is not necessarily, and the investing public should understand this, it's not necessarily compliant currently with the appropriate laws of our nation to protect you, the investing public, to get full, fair, and truthful disclosures to understand what's happening at these platforms. So that being the case, traditional finance, much of traditional finance being compliant, has some question and is adverse in dealing with what may well be, depending upon the company and so forth, dealing in highly speculative assets that are not necessarily compliant with their laws.
Yeah. Let's talk, therefore, more broadly about your focus and enforcement. I just want to bring what one particular builder in the ecosystem, the Ripple founder, had to say a little bit earlier. If you could just take a listen.
The SEC is kind of playing offense and attacking the whole industry. This is not a healthy way to regulate an industry. Your regulation through enforcement, as opposed to where we're seeing in other countries where they're doing the work, right? They're codifying, they're creating a framework that allows an industry to grow while protecting consumers. And I think that's really what the U.S. is lagging.
Now, Chair Gensler, I'm pretty sure you might say, well, look, a founder in that sort of business might be saying this, but what about some of these players? We've spoken to many who've perhaps been part of previous administrations who are now, you know, advisors to some of these companies and worried a little bit about the holistic nature of really trying to regulate and worried that it is more about enforcement rather than rules of the road at the moment.
Caroline, there's nothing incompatible crypto and our securities laws. Our securities laws were brought about to protect the investing public against fraud and schemes and manipulation. And it was through this idea of full, fair, and truthful disclosure, registering with the SEC when you're raising money from the public and the public's anticipating a profit. It's pretty straightforward, actually common sense approach to helping the public in investing. So this broad field, we have one goal at the SEC, is for them to come into compliance, whether it's the tokens, that's basically people raising money or offering these tokens. And it's also what I'll call the storefronts, but they can call themselves crypto exchanges or lending or staking as a service or other intermediaries to come into compliance and ensure that they don't mislead the public, but also that they don't commingle the funds, they don't take the public's funds and do things we just don't allow in our financial markets. We don't allow the New York Stock Exchange to also play with the customer's funds and make markets, run a hedge fund, run a dealer, be in the clearing business. We separate out those conflicts.
Mr. Gensler, thank you for your time. You've set out the goal there. And what I want to ask you about is the results of your actions. You have asked a number of names in the crypto industry to register their products with the SEC. Very few have, in particular those that are most known to us, the bigger names in the industry. Why are they not acting on your requests?
Well, the law is the law, and they need to come in and properly follow the laws, and we will work with them to do that. But in the meantime, we will also look out for the investing public. And we've been very clear, for instance, about what's called crypto lending and what the requirements are there, about staking as a service. We've also been rather clear about custodying customer funds. And we will continue to do this. And of course, we would most suggest that they come into compliance.
Mr. Gensler, there are all types of subject matter crossing your desk at the moment. One of them is artificial intelligence. Caroline and I have been discussing all week what the finance industry is doing in often a not uniform way with regards to AI. What are your concerns about artificial intelligence, potentially conflicts of interest in the asset management industry, for example?
I think this is one of the most transformative technologies of our times. I was honored when I was at MIT to do research and teach both on AI and crypto. And I think this artificial intelligence, it's changing how we're going to drive, how radiology happens, and yes, how finance happens. Our particular focus is that robo-advising, and there's 51 million accounts in America that has separately managed accounts from investment advisors, brokerage applications, again, millions of Americans, that the applications are using artificial intelligence, predictive data analytics, where they may be putting their revenues, the platform's revenues, this is, ahead of their clients' interest, and how to deal with those conflicts where they're scooping up data on our lives, scooping up data from our, potentially from how we drive our cars to our Fitbits to the programs we watch, and then marketing to us, differentially marketing to us, rather than putting us first, putting us, the clients first, which is, I think, really what finance is meant to be about.
Finance is also, we hope, about transparency and about lifting all boats as well. And you at the moment are trying to transform regulation in many ways, trying to ensure that we have this overhaul of regulatory profiles so that transparency does come to bear within the equity markets more broadly as well, Chair Gensler. I'm interested in particular about some of the responses you're getting to that big proposal you put out in December, in particular the National Association of Security Professionals. They're representing women and minorities. As we enter, of course, the month of where we think about equality, in particular for women, we come out of that for people of colour for February. I'm wondering about some of the worries that they have about ability for minorities to participate in equity markets.
We put out 4 proposals in December addressing 4 different aspects or problems in the market. And it was really to make the markets work better for all Americans, working Americans of our great diverse nation, men and women alike, people of all racial and ethnic backgrounds. And it's really about them. Those are our clients, and that the markets actually, when they submit an order, give them and work towards best execution. And that we try to level this playing field, because so much of the market now, if you're a working family and you're just trying to invest in the market and you put an order in, it's going not to the lit, transparent market, but it's being routed off to wholesalers in what's called the dark market, and trying to level up that competition.